These are 7 top stocks in pre-market with big percentage move today. Our review on VERO. Venus Concept Incorporated is a global medical technology company that builds and sells non-invasive and minimally invasive devices for aesthetic and hair restoration treatments. Their platforms, like Venus Versa, Legacy, and Artis 9, target everything from skin rejuvenation to robotic hair transplants. They serve over 60 countries and go beyond the usual dermatology and plastic surgery clinics, reaching med spas and general practitioners too. Now, let's talk about why the stock just went absolutely vertical. Venus is up a jaw-dropping 247% in pre-market trading, and what's even crazier, about 50% of that breakout happened right at the pre-market open. It's not every day you see a microcap light up like this, so naturally, investors are scrambling to make sense of it. There are 2 key developments fueling the fire. First, the company was just granted a European patent for a new radiofrequency skin treatment device. That may not sound flashy, but for a company that lives on innovation and IP, it's a big deal. It strengthens their global portfolio and helps protect a product that could drive future growth. The other piece is the financing update. Venus secured up to $23.2 million in bridge financing from Madryn Health Partners, with another $2 million drawn down just last week. And yeah, the loan comes with a stiff 12% interest rate, so it's not cheap, but for a company that's been under serious financial strain, this gives them some breathing room. That funding will keep operations running and buy them time to stabilize or pivot. Here's the thing though, while the move is explosive, sentiment is still pretty cautious. This kind of jump smells like a classic low-float, high-volatility squeeze. There's real news here, no doubt, but it's also being amplified by the perfect storm of retail speculation, short covering, and momentum chasing. So if you're watching this, just keep your feet on the ground. The stock's up big, but this story's still developing, and fast. Our review on XXII. 22nd Century Group Incorporated is a tobacco products company on a mission to reshape how smokers consume nicotine. Their flagship product, the VLN cigarette, has 95% less nicotine than traditional smokes, basically designed to give smokers control over their intake. On top of that, they're a contract manufacturer, producing filtered cigars and cigarettes for other tobacco brands through their CMO business. So here's the big news making waves. 22nd Century just announced 2 new supply agreements with former customers for filtered cigars. That's not just a nice PR headline. It's a real signal that their core CMO business is starting to rebuild after what's been a pretty bumpy ride. These new contracts are expected to pump out around 500,000 cartons annually, with shipments kicking off in Q2. What's interesting here is this isn't just about filtered cigars. It's also about the bigger strategic play, expanding the reach of their VLN product. By locking in these filtered cigar deals with partners who already have shelf space and distribution, 22nd Century could be setting the table for VLN to piggyback into more retail channels. Now let's talk stock. This thing exploded pre-market, up as much as 265% at one point, before pulling back sharply into the open, ending up about 128%. That kind of price action tells you traders got hyped fast. But the sharp reversal also shows some caution still in the air. This is a solid business step, but the real story is still unfolding. Our review on PHIO. PHIO Pharmaceuticals Corporation is a clinical-stage biotech working on a cutting-edge front, RNA interference therapies, specifically using its IntaSil platform to help immune cells better attack cancer. They're targeting skin cancers like cutaneous squamous cell carcinoma and melanoma, with lead candidates PH762 and PH894. The big update? PHIO just got the green light from its Safety Monitoring Committee to move forward with dose escalation in its Phase 1b trial for PH762, which targets PD-1, a key immune checkpoint. The 3rd patient cohort showed no serious side effects or dose-limiting toxicities, which clears a path for higher dosing. While we're still waiting on the efficacy readout, clearing the safety bar is a strong early signal. The stock popped over 100% on the news, with a sharp 90% breakout spike, though some caution is lingering. In biotech, early-stage rallies like this are usually driven by momentum and hope, but until we see those pathology results, investors are keeping one foot on the brake. Still, it's a solid step forward for a small cap fighting for traction in immuno-oncology. Our review on WORX. SCWorx Corporation is one of those under-the-radar tech names operating in a space that's absolutely crucial: healthcare data. The company provides software and services to hospitals and healthcare systems that help clean up, organize, and make sense of massive amounts of messy data. Whether it's repairing item master files, streamlining contract and charge description management, or helping with big data analytics, SCWorx plays a behind-the-scenes role in improving efficiency across hospital operations. And in a space like healthcare, where even small improvements in data flow can have ripple effects on cost and care quality, that's no small thing. Now, what's really catching attention this morning is the stock. It's up 38% in pre-market trading. And the interesting part? There's no major headline driving it. No big contract win announced, no earnings drop, no M&A chatter, at least not yet. So naturally, it raises the question, what's behind the move? Most likely, we're looking at a classic low-float momentum play. SCWorx has a history of sharp, sudden spikes, especially pre-market, when volume comes in and buyers get aggressive. Sometimes these runs are sparked by rumors, social media buzz, or technical setups triggering breakouts. And when the float is thin, as it is here, even modest buying pressure can send the price ripping. That said, it wouldn't be surprising if there's something percolating in the background. SCWorx operates in a part of healthcare IT that's gaining more attention as providers look for smarter, more cost-efficient ways to handle data. Any signal of new contracts, partnerships, or tech upgrades could add fundamental weight to this move. For now, the jump looks speculative, but it's worth keeping on the radar. If volume holds and something concrete follows, this could turn into more than just a morning pop. Our review on MBOT. Microbot Medical Inc. is making strides in robotic surgery with its Liberty system, which is focused on minimally invasive endovascular procedures. The system aims to reduce the need for expensive equipment and specialized staff, while improving precision in areas like cardiology and radiology. They're also working on another platform, NovaCross, for other robotic surgeries. The big news today is that the company's Access PVI trial, testing Liberty, hit its primary endpoint. The trial showed a 100% success rate in robotic navigation and a 92% reduction in radiation exposure, with no adverse events. This solid data was presented at the Society of Interventional Radiology's annual meeting, and it's making waves in the market. The stock is up 28% in pre-market, even spiking 35%, though there's still some caution as the company awaits FDA clearance for its commercial launch. These results are a significant step forward, and if the FDA gives the green light, this could be a stock worth watching closely as it heads toward a commercial launch. Our review on DXF. Eason Technology Ltd, formerly Duanshin Financial Holdings Ltd, is a company with operations spanning both the real estate and digital security sectors. In real estate, they offer comprehensive management and consulting services, while in digital security, they provide solutions and hardware to protect critical data for both businesses and consumers. In pre-market trading today, the stock saw some serious action, up 22% at one point, but the real story is the massive 60% breakout it experienced, only for the price to quickly fall back down below where it initially popped off. This kind of wild price swing indicates some serious volatility, and it's clear that there was a lot of quick buying interest that was followed by just as sharp a pullback. Such sharp moves can happen when there's a sudden surge of excitement or news, but the fact that it dropped back below its initial high suggests that the sentiment may be more cautious now. Investors should be careful, as these kinds of swings often reflect uncertainty and can be unpredictable. It's important to monitor for any news or updates that might explain this wild price action, as it could indicate larger market sentiment shifts or a response to some new development in the company's business. Our review on HUBC. Cyber Security Ltd, formerly Hub Cybersecurity Israel Limited, is an Israeli cybersecurity company focused on protecting both commercial and government information from cyber threats. They specialize in encrypted computing solutions, offering products like secure platforms for AI and healthcare, quantum-secured cloud workspaces, and ransomware protection tools. Their goal is to provide a secure environment for organizations dealing with sensitive data, whether in the cloud or on-premise. Big news came today for Hub Cybersecurity with the announcement of a €20 million contract to lead a banking modernization project for Cassa di Risparmio della Repubblica di San Marino, the oldest financial institution in San Marino. The project will involve a complete digital banking and infrastructure overhaul, and if everything goes as planned, subject to regulatory approval, they're aiming to wrap it up by the end of 2025. This kind of contract is a significant win for Hub, especially given the size and reputation of the financial institution involved. The news led to a nice pre-market pop of 13%, showing strong bullish sentiment from investors. It's a positive signal that investors are reacting well to this deal, seeing it as a key step in Hub's growth strategy and expansion into critical sectors like banking. However, while the contract is a promising step, we'll want to see it come to fruition and keep an eye on how regulatory approvals unfold. If the project moves forward as expected, it could be a major revenue driver for Hub Cybersecurity. Please subscribe, give the video a like, and watch more from our playlist. Thanks.